few options for your YouTube intro. Pick the one that best fits your style. Option 1, concise and direct. Hey everyone, and welcome back to Forex Scope. Today, we're diving deep into the EURGBP pair, breaking down the 15-minute and 1-minute charts to uncover the latest trading opportunities and future price movements. If you're looking to stay ahead in the Forex market, make sure you hit that subscribe button and turn on notifications so you don't miss out on any of our insights. Let's get started. Option 2, friendly and engaging. What's up, Forex traders, and welcome to another insightful session with Forex Scope. I'm excited to bring you today's analysis on EURGBP, focusing on the fast-paced 15-minute and 1-minute timeframes. We'll be looking for those crucial buy and sell signals and painting a picture of where this pair might be heading. If you're serious about refining your Forex strategy, this is the place to be. Don't forget to subscribe and join our growing community. Let's jump right in. Option 3, benefit-oriented. Hello and a warm welcome to Forex Scope. In today's video, we're putting the EURGBP under the microscope, specifically on the 15-minute and 1-minute charts. Our goal is to equip you with clear analysis, actionable buy-sell signals, and a glimpse into the future price direction of this pair. If you want to make more informed trading decisions, smash that subscribe button and join us regularly. Ready to unlock some potential? Let's go! The support zone is identified between timestamps 176-242-1400 and 176-242-3200, with prices ranging from 0.87974 to 0.88016. This area shows significant price action with multiple rejections and consolidation patterns, particularly indicated by the cluster of candles in this price range. For instance, the candle at timestamp 176-242-1400 shows a close of 0.87981 after opening at 0.88016, with a low of 0.87974, suggesting a strong pushback from lower levels. Similarly, the candle at timestamp 176-242-3200 opens at 0.88016 and closes at 0.87983, with a low of 0.87981, reinforcing the area as a potential floor. The tick volume in this period is notably high, with 241.0 and 196.0 units, suggesting significant trading activity and buyer interest around these price levels. This area demonstrates clear indications of demand, where prices have been repeatedly tested and have shown a tendency to reverse upwards, forming a well-defined support. The presence of larger candle bodies and wicks in this vicinity further supports its significance as a price action-based support zone. This price range acted as a floor for the assets movement for a considerable duration, attracting buyers and preventing further price depreciation. The resistance zone is identified between timestamps 176-243-0400 and 176-243-1300, with prices ranging from 0.87963 to 0.88178. This area exhibits strong selling pressure and a significant upward price surge followed by a sharp retracement, indicating a battle between buyers and sellers. The candle at timestamp 176-243-0400 shows a dramatic price expansion, opening at 0.87988 and closing at 0.88144, with a high of 0.88178, which represents a significant breakout attempt. However, this was followed by a sharp decline in the next candle, which opened at 0.88144 and closed at 0.88101, with a low of 0.88079, demonstrating a strong rejection from the upper bounds. The high volume during this period, particularly the 879.0 tick volume at timestamp 176-243-0400, signifies intense market activity and the establishment of a price ceiling. This price point acted as a barrier where sellers aggressively entered the market, pushing the price down from its highs. The rapid price reversal and the subsequent inability of the price to sustain levels above this zone highlight its importance as a resistance area. This zone is characterized by a swift upward move that ultimately failed, leading to a significant downward correction, a common characteristic of strong resistance levels formed by aggressive profit-taking or fresh selling. The support zone is identified around the price of 0.88025 to 0.88017. This area shows a notable period of consolidation and repeated testing of the lower boundary. Specifically, looking at the data from timestamp 176-243-3760 to 176-243-3880, we observe prices hovering around this level. The low price within this time frame was 0.87995, and the high was 0.88027. This zone acted as a floor, where the price found buying interest multiple times, indicating a strong demand area. The presence of several candles with lower wicks touching or closely approaching this price range suggests significant buying pressure stepping in to prevent further declines. The density of trading activity around this level, with multiple touches and a period where the price failed to break decisively below it, confirms its role as a significant support. This area represents a price level where buyers have historically shown strong conviction to step in and absorb selling pressure, thus preventing further downward movement. The price action indicates a balance between buyers and sellers, but with a clear tendency for buyers to take control when the price reaches this vicinity. The resistance zone is identified between the price of 0.88057 and 0.88072. This area exhibits clear price action characteristics of a resistance level, marked by multiple rejections of higher prices and a period of indecision. Observing the data from timestamp 176-244-0480 to 176-244-0780, the price repeatedly attempted to push higher but encountered significant selling pressure. The highest price reached in this range was 0.88054, and the lowest was 0.88039. The formation of upper wicks on candles, especially those around timestamp 176-244-0480 and 176-244-0780, indicates that sellers were actively defending this price ceiling. The price struggled to sustain itself above this zone, leading to pullbacks. This suggests that a considerable amount of supply is present in this price vicinity, making it difficult for buyers to overcome and push the price further upwards. The repeated failure of the price to break and hold above this level signifies the strength of the selling interest at these elevated prices. The price action within this range often shows a battle between buyers and sellers, with sellers ultimately prevailing to push the price back down, establishing it as a significant resistance. The EUR/GBP pair is currently trading at 0.88027, which is just above the established 1-minute support level of 0.88025 to 0.88017. This suggests potential for upward movement. The previous 15-minute resistance at 0.88144 to 0.88178 was broken with significant volume, indicating a bullish sentiment. However, the price is currently facing resistance around the 0.88057 to 0.88072 mark on the 1-minute chart, which also aligns with a Fibonacci retracement level. Given the recent price action, a potential scenario involves a retest of the upper Bollinger Bands and a brief push towards the 15-minute resistance. This would likely be followed by a retracement as sellers defend the higher levels, potentially forming a zigzag pattern. The tick volumes observed, especially the spikes, suggest dynamic market sentiment. We anticipate a short-term bounce from the current support, followed by a move towards the 0.88072 area, and then a potential pullback before another attempt to break higher or consolidate. The upward trend observed in the Fibonacci levels, 0.88025 less than 0.88072, further supports a bullish bias, suggesting that the price will attempt to move higher. However, the proximity to the 15-minute resistance zone indicates that this upward momentum might be met with resistance, leading to a more volatile and potentially sideways movement before a clear direction is established. The overall outlook suggests a cautious bullish bias with potential for price fluctuations.